Hey, how's it going, everyone? Welcome to Finance with Abram. This past week, I've been loading up on Microsoft stock, and I'm excited to share why. While this stock has been trading under the 50-day and 200-day moving average, I've been adding to my position and dollar cost averaging in under that $400 mark. As you see it up there on the screen, Microsoft isn't doing so well on the charts with this stock. However, the fundamentals in the company have not changed for the worse to warrant such a huge drop, I believe. This is not financial advice, but I want to tell you 5 reasons why I've been buying this stock, from its rock solid fundamentals to some game-changing moves in AI and cloud computing. There's a lot to unpack. Let's get into what's got me bullish on this tech giant. So Microsoft, ticker symbol MSFT. One of the main reasons why I've been buying this stock, and it's one of my favorite stocks I've been buying recently, is because of its strong financial performance. Have you heard or seen or listened or smelled their recent earnings? In their Q2 2025 earnings, they reported revenue of $69.6 billion, up 12% from last year. That's like adding the entire GDP of a small country to their books in just one quarter. Their operating income jumped 17% to $31.7 billion. Now that's really impressive. A company this size growing like that in this kind of economy. Their gross margin is at 70%, which is slightly down from last year due to their massive AI investments. If you've been paying attention to the Magnificent Seven stocks, Amazon, Apple, Google, Meta, Microsoft, Nvidia, Tesla, then you definitely heard about how much some of these companies are spending for their AI infrastructure. And, of course, Nvidia has been benefiting a lot from that. So yeah, they've definitely been spending money to increase their AI infrastructure and to keep growing on that front. But we'll get into that a little bit more later because they are seeing some benefits from those investments in that space. But also, their net income rose by 10% to about $24.1 billion. Now, they've been achieving some of this growth by heavily investing in AI and automation to streamline their operations. For example, they've implemented AI-driven predictive maintenance in their data centers, which has reduced downtime and cut energy costs. So a lot of things that Microsoft is doing aren't right in front of you out in the open, like their products, Office and Xbox and Azure, things like that with their cloud computing. So yeah, there's definitely those things that about Microsoft that are growing, and I'm going to show you that and get into that in one of the next reasons why I've been buying the stock. But there's things that Microsoft is doing behind the scenes that's making their company stronger and run more efficiently. Now let's get into the next reason why I've been buying this stock, and that is because of their diversified revenue streams. Yes, Microsoft is like an ETF themselves. Like they're like their own exchange traded fund, because when you're buying Microsoft, you're not just investing in a store or one product or a service. When you're investing in Microsoft, you're investing in a group of services and products just working separately, and some of them working together to drive growth in Microsoft. You see it right there on the screen. You see the growth that they're obtaining year after year, quarter after quarter, with personal computing, the intelligent cloud, productivity, and business processes, the Microsoft 365, also LinkedIn, Azure with the cloud, and Microsoft Xbox, Windows. There's just so many factors that are moving forward for Microsoft. So as you see here on the screen, the revenue breakdown from these different products and services, you've got double-digit growth in various components of their revenue breakdown year over year. Now, yes, there's a couple of single digits, high single digits, like 9.23% at LinkedIn and 8.08% in Windows. But then you have the double-digit growth, like the 22% growth in their server products and cloud services, the 12.34% growth in their Office products and cloud services, gaming, 39.03% growth, and in dynamic products and cloud services, 19.20% growth. Now, there's a couple negatives right here. We'll hit on those. You see enterprise and partner services down about negative 3.87%, and devices down about 14.76%. So yeah, they're not everything's all golden and roses and just growing year over year, but most of the company is growing year over year, bringing in that revenue and with those nice margins. You see right there on the next graph, the cloud computing that's driving Microsoft's growth. Then these are combined quarters right here, quarter 1 and quarter 2 of 2021, and then 2022, and then 2023 and 2024 right there. You see the growth up and to the right with their cloud services and properties. And that's in the billions of dollars right there. That's definitely been helping drive Microsoft's growth, and it will continue. I mean, I don't see any kind of slowdown in cloud computing and AI. I mean, what's going to drive a lot of the growth with AI? Yes, hardware is going to be a big part of it, with robotics, with, automobiles, and with computers themselves and computing, and that just made me think the quantum chip that Microsoft is just recently talked about that they've developed. That's not even on one of my reasons why I'm buying the stock, but that is definitely one of the other reasons that I'm like a bonus of buying this stock. Microsoft is doing some great things, like I say, in front of you with the news and then behind the scenes, and then they tell you about it like, oh yeah, hey, we've developed this quantum chip that can do these amazing things. Like, that's not an easy feat. That's, definitely something awesome. But yeah, so that's just more growth, because once you start building more things in-house, that's less you got to spend outside, and you can kind of nail down, you can focus in on certain things. What do you need these chips to do? What do you need this software to do to better your company and services that you're providing for other people? And so with Microsoft, they don't have all their eggs in one basket. Of course, they got Windows, Office, cloud services, gaming with Xbox and LinkedIn and so forth. They're running basically a tech conglomerate themselves. That diversity helps them stay stable, even if one area takes a hit. And of course, with the growth comes a lot of spending. They're expecting to invest like $80 billion in AI-enabled data centers in fiscal year of 2025 alone. They're spending a lot of money to build their AI infrastructure and to grow it. And that's the reason why some investors are a little hesitant to invest in some of these companies, because they see how much money they're spending. However, many of these companies are showing why it's worth it with the money they're spending. Meta Platforms, this video is not about them, but that's another company that I've been trying to increase my position in, especially with them taking a hit. Meta invests a lot in AI, and it's definitely paying off for them with how they're providing their ads and different features within, Facebook and Instagram. So it really depends on how the companies implement that AI, how they use it to determine was it worth how much they're spending on it. Microsoft heading in the right direction with that for sure as well, I believe. One of the fascinating things about Microsoft and AI is how they're integrating it across their product lines. For example, they've added AI-powered features to Office 365. In gaming, they're using AI to enhance graphics and create more realistic NPC behaviors in Xbox games, and with NPCs being non-player characters. So those are characters in a game that are just being controlled by, the data, the coding of the game. So it's not an actual player playing the game, controlling that player. But with AI, you can make those characters that aren't really getting played by an actual player, you can make those NPC characters behave and act in a more natural way, in a more reflective way of what's going on in the environment and with the actual person that's controlling their character in the game. So it makes the game more immersive, makes the game better overall. And Microsoft's not just growing with themselves with Microsoft products from the start. With Microsoft created products, they continue to boost their company and growth with acquisitions. In 2021, they acquired Nuance Communications for like $19.7 billion, which has significantly boosted their position in healthcare AI. And of course, not that long ago, they bought Activision Blizzard, which is increasing their dominance in gaming and so forth. And Microsoft isn't afraid to spend billions of dollars to obtain another company to drive their growth and strength in certain segments of the economy. So yeah, diversified revenue streams, definitely one of the reasons why I've been buying Microsoft stock. Now on to the next reason, their strong market position. Number 2 in cloud computing is Microsoft, underneath AWS, Amazon. That's what really drove this cloud infrastructure and everything. Is AWS, Amazon. That's when I first started really learning about the cloud more years ago, was through AWS. It was like, oh yeah, Amazon. Yeah, Amazon.com. Yeah, they make money there. Not as much as they do with AWS. That's their main growth driver, was bringing in a lot of their revenue. Now their retail has been doing better and better year over year. And it's definitely grown and become a very serious factor in their revenue and growth. But that AWS, their cloud is top notch. And with Microsoft, they're not that far behind. You see it right there, 21% of the cloud market belongs to Microsoft with Azure, and that's back in the Q4 quarter of 2024. And worldwide, they're definitely a market share leader in cloud infrastructure services. So you got Microsoft right there, number 2. Below them, you've got Google Cloud right there, about 12%, and then so forth, so forth. And then you have the single digit. So the top 3 cloud infrastructure plays are going to be the AWS through Amazon, Microsoft with Azure, and Google Cloud with Google Alphabet. Now, this video is not about those other 2 companies, but Amazon and Google Alphabet are also 2 other companies that I've been buying a lot more than normal this past week while they've been hit as well. Won't get into that. I'm actually going to make another video on those two companies similar to this one, reasons why I've been buying them. I'll save that for those videos. Back to Microsoft. So as you also see, Microsoft is synonymous with computer. So this graph right here you see, is as of February 2020, you see Microsoft Windows 72.9% of the share of operating systems worldwide. Now here in 2025, more recent data I've seen, they're still holding about 70 to 73% of the global market share for desktop operating systems. Now you may think, okay, that's not really growing that much from that 2020, but the thing is they're keeping their hold on that as there's more computers out there. Now that's been growing as well. And while that's been growing, Microsoft has been holding what they have and growing along with it with their share of operating systems. Now, me personally, I use Apple. I'm recording this video right here on a MacBook, and that's what I prefer to use personally. But at work, where different places I've worked, it's always been Microsoft Windows. And with the dominance that they have in certain products like Microsoft Office, that dominance allows them to maintain high profit margins. And also not just with Office, with the Windows operating system and with the cloud space, with Azure. And also with gaming, as I stated in the previous reason, them buying Activision Blizzard for around, $75 billion, a lot of money, but that helped them continue to be a major player in the gaming industry, which has them continuing to build this amazing tech empire. Now, on to another reason why I've been buying Microsoft stock, ticker symbol MSFT. You see it right there, that attractive valuation. Now, yes, Microsoft has been trading under that $400 a share price in those 390s, 380s, and that's when I've been adding to my position each day, just adding and adding. As you see right there on the screen, buys of Microsoft, and they're trading underneath that 50-day and 200-day moving average, not just by a little bit. You see it there by a good amount, and it crossed right there, the 50-day and the 200-day, right around that $420 a share price. And I've been really liking that Microsoft's been staying down here. And as it continues to stay down, I'll keep buying it. If it goes down further, I'll definitely keep buying and try to increase the amount that I'm buying. Now, Microsoft is one of those companies that typically trades at a premium, and it still is trading at a premium. Their PE is around 29% right now, give or take, but that's lower than their 5-year average of their PE. As you see it right there on the screen, typically with Microsoft, they trade at around mid 30, almost 40 PE is what they kind of trade at. And that's just kind of given to them. And it's not really like, people don't really bat an eye at that much because it's Microsoft. So people buy Microsoft stock when their PE is at the mid 30s, when it's at the 40s, as you see it right there when it was up to 60. People were buying Microsoft stock then. So of course there's going to be people buying it when it's lower. Some people aren't because they're going to be afraid like, oh, it's going down, doom and gloom. I got to sell. I'm not buying it. Me, on the other hand, I like to dollar cost average throughout the market when it's up or down, but I definitely like to increase the amount that I buy when the market is down and when it's running on fear. As you see it right there, the CNN Fear and Greed Index. We have been in extreme fear this past week, and it's been lovely for somebody like me who likes buying stocks when they've been beaten down, when the fundamentals in the company themselves haven't changed that much for the worse to warrant that beating down stock prices. So their valuation for Microsoft still trading at somewhat of a premium, but definitely on the lower end of that premium. So it's like this Microsoft stock is on sale compared to its historical valuation, which could be a good opportunity for value investors who believe Microsoft's long-term potential. Despite this discount that's going on right now with Microsoft, their market cap is still over $2.5 trillion, which is more than the GDP of Italy. And yet many analysts believe that it's undervalued. Why? Because of its growth potential, especially in cloud and AI. And with their current valuation and growth prospects, many believe this growth story is far from over. Now, not everybody believes that, of course. There's definitely some people who think, it may be over for Microsoft, it may be over for Apple, maybe over for Amazon, big tech, this is over, the bubble is going to pop. Are we in a bubble? I don't know. Is the bubble popping right now? I don't know. Are we in a recession? Are we going to recession? Now, of course, if we go into recession, typically a lot of stocks are going to go down further, including probably Microsoft. However, will they survive a recession? I think they would, but of course, nothing's guaranteed. I'm not going to say that, not financial advice, but I believe they would come out of that recession possibly stronger than they were when they went into the recession. And now the fifth and final reason in this video of why I've been buying Microsoft stock, and that is because of the shareholder returns. Microsoft isn't just hoarding its cash, and they have a lot of cash. they're sharing the wealth with shareholders. In the second quarter of 2025, they returned $9.7 billion to shareholders through dividends and share repurchases. It shows that they're confident about their future and committed to rewarding investors, because buying back shares, companies do that for a couple different reasons. Sometimes they see that their share price is undervalued. They think their share price is too low, so they're going to buy it back, which drives up the share price because that has less outstanding shares on the market, which makes the shares that you and I own more valuable because there's less shares in the market, but we still own our shares even with the company buying back their shares. Now, that can also show strength in the company because the company says that, our stock price is too low for what we're doing, for what we got going on in the pipeline. Let's buy some of this back. This is way too low. We think it should be higher. And, that's one of the reasons why companies buy back shares. Different reasons. That's some of the main reasoning right there. But Microsoft has been buying back shares, and not just a little bit. They've been buying back in large amounts. And now also what's really impressive is that they're doing these buybacks and dividends and growing that while still investing heavily in R&D, research and development, and strategic acquisitions. In the last decade, their dividend has grown at the compound annual growth rate of about 10.2%. So it's like they're giving shareholders a raise every year. And you see that graphic on the screen right there. What's going down? Shares outstanding. What's going up? The dividend. That is a beautiful chart right there. Now, also what's interesting is how they're funding these returns. So despite the massive shareholder payouts and R&D investments, Microsoft still has over $100 billion in cash and short-term investments on its balance sheet. So even though they've spent all this money, of course, on acquisitions, in dividends, in buying back their shares, in research and development, and AI, they still have a hefty amount of cash on their balance sheet. And that's it with the video, folks, and 5 of the main reasons why I've been buying shares of Microsoft in this past week or so. Definitely, while it's been under $300 a share, underneath that 50-day and 200-day moving average nicely. And the numbers don't lie. Microsoft is built for the long haul. So what do you think? You bullish on Microsoft as well, or bearish on Microsoft? Do you own it? Have you been buying it, selling it? Let me know down in the comments, and be sure to like the video if you like the video and subscribe to the channel for more stock insights and ways to make your money work harder and smarter for you. Hope you enjoyed the video. Take care.